Good evening, I'm Tevon with your NewsXstreem Market Pulse. Tonight, the spotlight shines on gold, not just as a precious metal, but as a global signal of market tension. After 2 days of declines, gold surged over $50 Thursday, climbing back above 3,330s per ounce, as the world reacts to shifting tones in the ever-volatile US-China trade saga. Gold snapped its losing streak in dramatic fashion, rising more than 1.5% as renewed concerns over US-China relations reignited safe haven buying. Current price, XAU USD, 3,330.80s, session low, 3,287, biggest intraday surge in over a week. Though President Trump softened his position on a harsh 145% tariff line, Beijing is holding firm, demanding that Washington remove all unilateral tariffs before talks can resume. Translation: traders are hedging against uncertainty, and gold remains the hedge of choice. Supporting gold's rebound is a weakening US dollar. The dollar index, DXY, which tracks the greenback against major global currencies, slipped after hitting a 4-day high, while Treasury yields plunged. 10-year Treasury yield, down 7.5 bps to 4.31%. 10-year TIPS real yield slid 7 bps to 2.023%. As yields fall, the opportunity cost of holding non-yielding assets like gold decreases, giving bullion even more room to climb. A fresh wave of U.S. economic reports also stirred market sentiment. Durable goods orders skyrocketed from 0.9% to 9.2% in March, mainly due to aircraft sales. Initial jobless claims rose slightly to 222,000, in line with expectations. Despite strong factory data, concerns linger over the labor market's fragility, with multiple Fed officials warning that rate cuts could follow if job conditions worsen. The Federal Reserve continues to walk a tightrope. Cleveland Fed's Beth Hammack suggested action could come as soon as June, if supported by data. Fed Governor Christopher Waller echoed that sentiment, noting that rising unemployment could force the Fed's hand on rate cuts. Still, markets are betting 94% that the Fed will hold rates steady at the next meeting, according to Prime Market Terminal. End of year Fed funds rate projection 3.45%, implying 86 BPs of easing over the next few months. Technically speaking, gold has regained its bullish footing, but there's still work to be done. Immediate resistance 3,386, April 22nd high. Next resistance levels 3,400, 3,450, 3,500. Support to watch 3,300, 3,200, 3,467. Deeper drop zone 50-day SMA at 3,041. If bulls break 3,386, the path to $3,400 and beyond opens. But failure to hold above $3,300 could see a retreat toward 3,200. Gold's surge today is more than a market move. It's a reflection of a fragile global landscape. With US-China trade friction reigniting, Fed uncertainty mounting, and economic data giving mixed signals, gold is once again emerging as a barometer of investor anxiety. The metal may glitter, but it also warns. And as tensions escalate, markets, and perhaps central banks, will be watching where it shines next. I'm Tevon, and this is NewsXstream, your source for market moves, money signals, and global clarity. Stay gold.